broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. ECB day. Obviously, the market didn't get what it wanted to get. Euro's coming off quite dramatically. So perhaps one of the team members want to comment on what's happening with the ECB.
The ECB is basically keeping rates unchanged until summer of 2019. That means they're completely out of the game from here on out. I mean, for the next year. And the market was like, oh, they're going to start tapering bond purchases. They basically just said that, hey, we're going to stay on hold for a year. That's it.
Okay, that was a disappointment.
Well, yeah, hell yeah, because if you were thinking that you're going to start to see, European rates start to move higher, you're crap out of luck now. So you're screwed. I mean, so everybody that was buying this euro in anticipation of that is that's not going to be the case now. So
okay,
the euro is just going to be sold.
Yeah. Okay. Well, one area of the market that actually reinforced where yields are dropping here, which was what we've been talking about all week, 10 years coming off again, and the 30-year. And also yesterday talked about selling dollar strength, so that worked for U.S. dollar yen up there. I guess at Dixie, Dixie's almost recovered all of its losses from yesterday. I don't know what to do. So I guess I do nothing, played the Fed right by, talked about buying breaks in bonds after the Fed, shorting the yen after the Fed. This is surprising me as well in the dollar because, Blake, I don't know about you, I thought we had a chance to get down to about 92.5. That's looking less likely. Maybe this is all we're going to get in the dollar correction, which wasn't much. Okay, so that's the way that looks, and we're getting a little bit of a rebound in the S&Ps. Okay, nothing spectacular yet, but perhaps the market likes this, that the ECB is on hold. I'd say Powell was pretty hawkish yesterday, so we'll see what happens there. NASDAQ, I still thought we had a shot for 7,300. Maybe that's going to happen. So those of you who had the yen analyzed correctly, hope we helped you, are probably doing okay. Let's see what's happening. It's not affecting precious metal prices much with the euro sinking. So we're still getting upside in the metals, and that's more about, I think, the yen correlation. So we'll see what happens there. And God, the euro yen was a great short up there. Didn't make new highs. Pretty negative candles. So this may just be beginning this euro yen decline if Blake's right. And the euro, that was it for the euro. And the yen's under pressure. This could be a pretty good trade. So I want to welcome all of our viewers from investing.com. And want to encourage them that if they're not satisfied with their broker, to contact Trent. Our sponsor for our webinars is Forest Park FX. They are your broker solution because they represent multiple FX brokers across the globe. And they have they've done all their due diligence on who they have relationships with. And if you're seeking another broker, you're not just saying, oh, well, I'll open an account with Forest Park FX. No, they're the solution with other brokers that they could refer you to. And also, if you're interested in becoming a subscriber, there is a rebate program. So as you're trading along, it pays for your subscription here, which I believe is we have one of the best teams, or the best team on the net. We have one of the best webinars on the net, free or paid. So I encourage you guys to get in there and lock in prices. I believe our prices go up at the end of the month, and you'll be locked in at these prices. So that's about all I have to say. Although we do have a great guest today, timely in my opinion, especially with crypto crashing Sunday on a hack. and so far not much of a recovery till right now. But I had this wedge line drawn here, and we do have some divergence on the 4-hour. So at the minimum, I don't think I'd be short anymore. I might even be looking for breaks to buy. Nice little reversal day that we're getting here. See the candle. So, I mean, there was a lot of pessimism and discouragement when we broke down under this low in crypto. This may not be a bad level to put your toe in the water in crypto. So what are you doing in light of this? And we still haven't had the press conference, have we, Blake?
No, that comes soon, but give me about 1 minute. I just need to update ForexAnalytix.
Okay. So everyone do okay on the Fed yesterday? We're still in May. Go ahead, Steve.
The ECB wants to go to the next recession with 0 rates. Huh? That's what I understand. That's going to work out very nicely. Something tells me.
Okay. Okay, so people like the atmospheres, not necessarily our analysis. Stayed away from the Fed. Okay, I reacted to the Fed. You know, that's why I say instead of playing roulette, you know, most people were anticipating a higher euro. That was the talk on the street. So you react to the reaction. I don't know what type of reaction. I can't fade the euro right now. I think I'll just stay with what was working yesterday, and that includes, you know, US dollar yen starting to get a little bit of a bounce.
So far today, we're seeing an outside black candle for the Euro USD and an outside white candle for the DXY.
Yeah.
So, you know, quite important reversal candles. But I have to caution here, you know, Draghi can definitely move the market, right? So, in my opinion, we should be a little bit patient and also hear what Draghi has to say.
Right.
Before, you know, and see how the daily candles actually do close. So far, we're seeing the potential of big reversals. There's no question about it. But I do think that, you know, the prudent thing to do is wait a little bit and see how the market is going to settle. Definitely so far, you know, the signal that the ECB sends out, I think, is more dovish than the vast majority of the market participants would expect, especially considering the economic data we've been seeing and, you know, in comparison to what other central banks have been doing. So let's wait for Draghi and, you know, decide afterwards. But yeah, it looks like we might get a very nice reversal. And yeah, there is the potential that that will mark the incremental new low and incremental in the DXY, incremental new high in the Euro USD that we got today. Theoretically speaking, can end up satisfying, you know, the end of corrective moves. Don't forget that, Dale, you were here since the NFP Friday. It was almost 2 weeks ago when I took my long in the Euro USD. I said that my target is actually 118.50, and yes, it can extend higher than that. And actually, I got very lucky. It went, at least on my broker, it went 2.5 pips above that. And since I had my position established almost 2 weeks ago, I got actually filled. So half of my long got closed. So now I'm holding the other half, and I will wait until the end of the day before I decide what I'm going to do with it.
Okay. Very fortunate and nice.
Yeah, very fortunate.
And patient too, because you just missed it by a few. I think it was here. So you sat through all this to get your price. That takes a lot.
Yeah,
like I said on Twitter. Like I said on Twitter, that you're a great trader and you're one of the most disciplined traders I've ever met.
Sometimes you need some luck.
Yeah,
but sometimes you need some luck.
Yeah, who's against luck? Anyone for luck here? I'm for luck. I think it's pretty good. Good to have.
Because as I got filled for just 2.4 pips to be exact, I could have not been filled for 2.4 pips.
Right. All right. So Oh, we got the action we were looking for in the bonds. Steve came, right after the Fed, they sold them off, and then they came back like champions yesterday. So I know Blake's going to be ready in a little bit, but does that build your conviction that bond yields could come down, and it held where it had to, and we're getting some follow through there today?
Listen, we are still holding above if we're talking now about the treasuries, we were showing yesterday as well that we had that descending wedge, which we broke above. We came down, we retested it. So far with this little rebound, we are holding that, but we would definitely need to see some acceleration. On the other hand, the bunds today found support at the 78.6 of the last move higher, and they do look good for some upside as well. So,
Okay.
yes.
I'm sorry. I'm back.
Hey, welcome back. Welcome
hey,
back.
Blake.
Sorry, all of a sudden, I have a ruckus happening around the house, so sorry about that. I'm sorry I missed anything that you said, so continue on.
Oh no, absolutely. I was just concluding. We made a little recap, and as we were waiting for you in the price action we've seen, I was saying, Blake, that actually we got an incremental new high today in the Euro USD, an incremental new low in the DXY. Perhaps those are enough to satisfy, the end of a correction. I said that we should wait for Draghi to speak first and see how the day closes. But so far, it looks like we might have some nice reversals and another leg higher for the dollar. Regardless, I would propose that we don't jump the gun yet.
Yeah, because we could pull back towards 116.5, even 116, and then put in a higher low. So I mean that is possible. It's another 100 handles,
but okay. So if you think about the ECB, basically just said we're not hiking.
Yeah.
We're not hiking. We're going to keep rates at current levels till summer of next year.
Probably sorry to interrupt, Blake, but probably you're right, because let's be honest, this is already a business cycle that's gone 10 years. If they want to postpone it for that long, there is actually possibility that they're not hiking at all, right? At some point, we'll have to go to the next recession, and who knows? A year is far away from today, right?
Yeah, I mean, it is. So the question is, what point, what point do people turn around and go, okay, well, the Fed continues to raise rates. They're going to continue to raise rates. Every meeting is live. So, and the ECB is stuck, basically. You got a situation where, what we had thought back in 2017, and I guess here, let me go ahead and take over the charts. We had this, let's go over. Okay, so in 2000, you go back, to the this 2015, 16, 17, the whole reason why the euro fell here is because everybody's thinking, okay, the Fed's going to raise, the ECB is going to, you have this divergence between monetary policy. So as of today, unless Draghi tells us something different, which how can he tell us something different when the press conference just came out, or the statement just came out that they're going to be talking about tapering? Basically they're saying they're going to stay on hold, and then you got the Fed that's going to continue to raise rates, and they're still looking into 2019 as they start having every meeting live. Every time the Fed signals, hey, we're going to have to raise rates again, all that's going to do is that's going to push the euro dollar lower and lower and lower because of that divergent monetary policy between the two central banks. So hey, I'm hoping that he says something that maybe might give us a rally back to like 117.60, and I'm gonna sell it if I can. That's my intent today, is to try to sell the euro dollar at a higher level now. Oops. US dollar Mexican peso. Ooh, we're testing some support here on the US dollar Mexican peso. Look at this. This is a descending wedge.
Yeah.
or ascending wedge, excuse me. It's testing support. We got to watch that.
It missed 78.6 on the weekly by 20 points. And look at that divergence at the spike yesterday. It looks heavy.
Yeah. Oh, yeah. I mean, this is, you know, it's just a matter of time before we show some sort of reversal. But yeah, I you know, again, you know, as far as the euro goes, I'm looking for rallies to sell into, and I'm hoping that that we get some sort of ability to sell at, you know, at a little bit higher level. The press conference is going to be starting in about 15 minutes, so that's going to be pretty obviously very important to the market, and something that we'll, you know, be watching, because as Steve mentioned, and I heard at least one thing that he said, is that this high that we hit in the euro dollar, it's set up a double top, but it was strong enough up here to where it tripped a bunch of stops. Actually, I shorted the euro dollar at 118.39, and I covered it at 118 like 29, like really quickly, like, or 30. I got in, got out, and I was like, oh yeah, that's a false breakout. I did not think we were going to drop as quickly as we did, but anyway, this double top now that we've got here in the euro dollar, it points lower, a lot lower. If we close below 117.40, basically, right? If we close below 117 or 117.30, it points us down to 116.20. That would be like the downside target of the euro dollar if we continue lower here. So just a real overall you know, bearish setup with the euro dollar. Now, again, press conference is coming. I do agree with Steve that, you know, Draghi can move the market, but what's he really going to say that's going to be much different from the statement? You know, anybody who was buying the euro dollar this week, based on those comments about tapering, and that was, you know, this is an hourly chart, so it would be all right through here, that you know, traders are buying the euro dollar all through the 117.50 level, and current prices where we're at, you know, they are probably, you know, thinking, oh man, I am not going to be on the right side of this trade. I need to get out. So, and I think if we get a close below 117, that will pretty much do it for us. So, anyway, just some food for thought on the euro. I am looking to sell rallies today, so hopefully we get a rally. You know, 117, I might actually look to sell it here very shortly. If we can move up towards 60, I think I'm going to try to get myself into a position in the euro, and that's what I'm thinking at this point in time. Now, as far as everything else, well, let's take a real quick look around just before the ECB press conference starts. Pound came under quite a bit of pressure, which is, we're still failing here at the this is just the 24% retracement. We can't even get above, but this 134, I mean, we're making actually lower highs. This is 134.40, 134.70, so we're making lower highs right now. I do have a short in the Aussie. As long as we stay below you know, basically 76 cents, I'm gonna keep it on the short side. The Australian jobs report was a little weaker than expected, so it was, full-time employment really dropped off, and not only the weak overall employment numbers, it was the full-time employment really dropped off quite a bit. So that's why I'm keeping a short Aussie. But equity markets right now are a little firmer. You can see the stocks, and you pointed this out, Dale. The stock market is a little stronger this morning, probably due to the ECB comments that they're going to stay on hold for another year, basically. Kiwi's not doing much. Dollar Canadian, we're dipping towards this gap fill here, which it comes in at 129.25 basically, which is also trendline support. I think I have a bid down there. I just don't know if it's going to get tripped or not. But looking to buy the Canadian at a little bit cheaper price if we can get it. I like it down there if it happens. So the Swissy, we spiked up. Now the Swissies, if the Swissy can get above 99 cents, I think that's where the Swissy will turn bullish. With equities as firm as they are right now, I'm surprised that the dollar Swiss is not stronger, but maybe it has more to do with yields, because yields are dropping once again. Excuse me 1 second. Yields are dropping again. We just looked at the peso. Peso's testing some pretty key support here, but I don't know. The dollar looks pretty firm, so I don't know if I would I'd be shorting the U.S. dollar Mexican peso yet. I personally am still looking for a move up towards $21 if we can get it. I don't know if we're going to get it. I mean, this is from a risk reward standpoint. You know, this is the place you actually want to buy the peso, not short it. You want to buy it here and put a real tight stop in. I'm not trading it that way, but you know, that actually makes sense. Let's see, here's the dollar. Oh, one thing that if you use ForexAnalytix, okay, use ForexAnalytix yesterday. Not the euro. I'm sorry. Let's go over to the dollar index. Yesterday, we sent out an alert, which we don't send out alerts that often, but the dollar index had crossed into a golden cross, which is when the 50-day moving average crosses over the 200-day moving average, and that was yesterday. Okay, so with the reason why this is so important is because with the dollar index giving us that golden cross, that tends to be pretty bullish. I mean, if you go back and you look, and let's go take a look at the daily chart here. And let me go ahead and put in the 50-period moving average so you can kind of see. Obviously, you had a golden cross here. We had some mixed signals here. So, you know, we had a death cross, which is when it goes the opposite direction. We had a death cross. It ended up being a false signal. Because we went right through the 50, 200-day moving average again, gave us another golden cross, which basically gave us another false signal. But the death cross here gave us a little bit of a move. The golden cross here gave us, you can see how we pulled back almost to the 200-day and then we rallied. Here's the death cross here that gave us a really big move to the downside. The golden cross that we're currently at, you know, I was really hoping for a move down towards 92.50 in the dollar index, but obviously, based on what we're seeing right now, we could end up seeing a rally in the dollar, especially if we close above the last couple of days highs. You know, we could end up making a move higher out of that previous death cross. So the golden cross has developed as something that I think we need to pay attention to. It's something that if you're bearish the dollar in general, something that we just need to be aware of, especially if you're, you know, even if you're shorting the dollar yen. And I tend to be more bearish the dollar yen than anything. If I'm going to be bearish a dollar pair, but the dollar yen could even firm in this type of environment, or maybe even stay pat. So just something to pay attention to with the dollar index. It's something that I was looking at. Now, one of the other things, oh my God, no way. Silver is right at resistance. I know I've been bullish precious metals, but man, we are up against really key resistance. As a matter of fact, while you guys are here, I'm gonna have to tweet it, because that's huge, right? That's huge. Holy cow. I mean, from a risk reward standpoint, you short it here. Now, I'm more bullish precious metals than anything, but this is I'm gonna have to tweet it. So just you guys have to stand by. I'm
This is the 5th test
whoops.
of this trend line, Blake.
What's that?
And this is
Yeah.
the 5th test of this trend line, which dates back to April of last year. So it is a very important trend line.
Yeah. This is a big deal. Shit. Sorry, I didn't mean to curse. I'm I can't type either. Trying to type quickly, and whenever you try to type quickly, it's never a good thing. I know it's not a good thing for me. So I'm tweeting that silver chart. It's such a big resistance here. And like I said, risk reward is to short it right now. It just short it and put in a tight stop. I'm not doing that. I'm just saying that is what the risk reward is. But look at gold. Gold's above the 200-day moving average now today, right at this moment in time. Oh, there it is. Well, there was silver. But gold's above the 200-day moving average. So what do you do, you know? What do you do? Anyway, Steve, really a lot of moves today. Big movements happening right now. What are you thinking here?
Absolutely. I'm really looking forward. First of all, I've been waiting for silver for such a long period of time.
Yeah.
You know, we were showing this on the webinar for a long time, you know, that silver was coiling, and I said that eventually, you know, this is going to lead to some type of a big breakout, and you're right, this is a key level. Now, obviously, recently, silver has proven that it's more bullish than gold is. So despite seeing also a moving gold, as you very well said, it's trying to penetrate through the 200 EMA. I do think that, you know, the way to go is silver, especially if we get a breakout. I think that should see some big acceleration. But I do think that we need also, you know, to remain patient and wait to see how the day will close, because you know, if confirmed, I do think that today's move will definitely have a decent amount of follow through. So, you know, the opportunity is still going to be there.
Yeah. Now, if we break out today, you buy pullbacks from here. Massive. And you know what's really scary, Steve, is if you get a rally in precious metals and you get a rally in the dollar at the same time. I would not want to be long equities here at all.
Oh yeah,
So
I totally agree with you.
I'm just saying, just saying.
Yeah, I totally agree with you. And if you remember, we were talking about this the other day. This is the weekly silver chart. If silver breaks out above here, actually the next area of resistance is at like 18.5. And if we break above 18.5, then, you know, in all honesty, we can even find ourselves at some point the 26. I mean, one step at a time, of course. But you know, this is going to be huge. So this is already like a big event that might happen. And then it's, you know, there is a vacuum. We can find ourselves trading like $1 point something higher in 0 time. And if we break above there as well, you know, who knows? There is a lot more potential upside coming. So, you know, people should be watching this, and they should respect that. And the other day you were also mentioning, and, you know, I told you what exactly I'm monitoring here, the gold-silver ratio. And not coincidentally, just look where the gold-silver ratio is as we speak, right?
Oh God, yeah, huge.
Yeah, here it is.
Yeah.
Here it is. At the same time that silver is threatening with a breakout, the gold-silver ratio is actually threatening with a breakdown. And as you very well said multiple times in the past, we know that when silver overperforms, metals in general tend to do well, right?
Right.
So I think that
I've been waiting for this for weeks, I must say.
well, let's you know, and I haven't bought physical gold and silver long. I haven't done it in over a decade, and I went long, or I went and bought physical gold and silver yesterday, a month and a half ago. And everybody in the chat room, in our ForexAnalytix chat room, knows that I went and acquired physical, which I just don't normally do. But but I believe a big breakout is coming too, obviously, or I wouldn't have done that. But anyway, really,
We got numbers coming out in 5 seconds.
Yep, press conference is starting. You guys, good luck. Good luck today. Thanks for everybody
Thanks,
for
Blake.
being here.
Thank you,
Jobless claims are better than expected, but oh, it's all green. Yeah, it's looking good for the dollar. Retail sales 0.8%.
0.5. Retail sales control to 218 versus 223. The initial jobless claims. The retail sales 0.8 versus expected 0.4. Yeah, that's a huge.
And all revisions are higher. It's good numbers for sure.
Indeed.
Some Canadian
Indeed.
numbers as well, housing numbers, which missed a little bit, but I don't think anybody's going to care about that right now.
Indeed. Let's have a look at the USD CAD. Regardless, USD CAD struggling, and we have to show this. The USD CAD struggling with this trend line. If I zoom out, you can see this trend line. So it's quite an important trend line, and the USD CAD has been struggling. Actually, it has been struggling. This is now turning to be a triple confluence because it's a horizontal resistance area. It's also the 78.6 of the last move lower, and most importantly, it's this potential descending trend line that is acting as resistance. So definitely a major level for the USD CAD. And I think, as we were talking about silver before, it's not that critical as the one with silver, but definitely in the FX world, this trend line is also quite important, because I do think that if USD CAD actually manages to penetrate through and close above here, then it's the 130, which can be like a last type of confirmation, but then we will be talking about like an important breakout, and which potentially will bring quite more strength in the pair. Okay. Now, on the other hand, USD yen was threatening with a beautiful actually evening star formation earlier on the day. Now it has pulled back, quite substantially. I mean, it has pared back its losses actually quite substantially. So it's not looking like an evening star formation anymore. But regardless, I have to point that out. We had a very a big reversal yesterday, a shooting star actually, after testing the area we were looking for. And if we do push lower once again today and we close below the middle of the candle we had 2 days ago, that's going to officially be an evening star formation then, and that will be considered quite a reversal candlestick formation, right? So keep a close eye to that. Blake mentioned it before. He said that, if there is one pair that he would be willing to look lower in the for the dollar, that's the USD yen. And so far, yes, the USD yen has seriously underperformed other USD pairs. Stelio, by the way, please keep us in the loop with the press conference. Yep. And what Draghi says.
Sure.
Okay, great.
Sure.
Now, what I was saying before, and I can show it here, we had an incrementally new high in the Euro USD. Luckily for me, that was enough to book profits from my 116.90 long. So I now maintain half of my original half position. So now I'm a quarter of my regular position long only, and I don't intend to close it even if it goes negative until I see at the end of the day. But definitely so far, this outside black candle is threatening with a big reversal. The exact opposite, and not coincidentally, you can see if you have a look at the DXY, here it is, incrementally new low in the DXY, and it's actually threatening with a bullish engulfing candlestick, which is quite a strong candlestick. So yeah, there is a risk that we will never make it down to the 92.50 to 92.70 area that we were looking for. But as I said, let's remain a little bit patient and see how the day closes. So far, though, the combination of the very good US data and don't forget that it's 3 consecutive days. We had very good CPI data, we had the PPI data. Today, we're getting very good retail sales in combination with the ECB being more dovish than expected, and keeping in mind that the DXYs consisted like 58% from the euro. They point to a high possibility that the DXY is actually going to be pushing higher from here. Okay, so that's now a strong possibility. On the other hand, the Aussie was always looking quite bearish, so dollar kept looking quite nicely against the Aussie. You can see why this is like a bear flag. It's pointing lower. We found actually resistance at the confluence of resistances. You can see that trend line was acting as support, and we tested it as resistance and failed. At the same time, this was also bear flag resistance, more or less. The 7640 area played a role once again. So having to do with the Aussie, I would have to say that if we do break below this area and roughly the 75 level, once again, I don't think that this time this is going to prove to be a false break. I do think that the next move is going to take us down to the 73.3 cent area. We find there a horizontal support zone plus the 127% extension of this move higher. Okay, so I do see.
Steve,
yes,
sorry, I don't know
yes.
if you had finished on that. Just a quick note on the first comments that are coming out. He's talking about inflation, and the main couple of things that he said is that he sees substantial progress in inflation adjustment, and that long end in the medium term inflation remains well anchored. And he did reiterate that rates are to be unchanged until at least the summer of 2019. So nothing really major so far, but I am keeping an eye on it.
Okay, let's see how that goes. I'm really wondering, Stelio, what's going to happen if we get strong indications that a global recession is coming before they start hacking rates, and in essence, they will have to start from 0 to negative rates and go where to fight the next recession if it comes like within 1 year.
Yeah,
I'm really wondering.
Very little ammunition. I mean, all they can do is go negative and do more QE. It's a bit scary.
But they're already negative. I mean, the deposit. Yeah, but yeah, okay.
Yeah, I mean very negative.
Minus 0.4. Yeah, but I'm not even sure that after a point in being negative, I do think that we will then start getting some more financial engineering, like helicopter money, and I don't know what else. But anyhow, we will discuss that when we get there. Okay, let us know if there's anything else. Now, cable is also obviously suffering here, and we also see a divergence here because cable, oppositely from the euro, didn't even get close to actually registering a new high from the previous high, like last week's. I would ideally want to see the 136 level printing, and I would be really willing to short it there. I actually have a quarter of a position long from 134. So I'm going to see what I'm going to do with that today. I really would want to see. I really would want to see it at higher prices because I do believe that a stronger bounce was due. But it's one thing what we want to see and one thing what the market wants to do. So we'll have to remain patient and see what happens from there. Now, having to do with stocks, obviously, the DAX, there it is liking the news, right? So it's threatening a break above the 12,900 area. Once again, it was negative on the day, and especially the FTSE even more. The FTSE was looking like it was about to break lower and print one more leg lower as we were expecting. But they do like the strong dollar. They do like equivalently the Euro USD and the pound USD weakening. So the FX is definitely going to affect those indexes as well. On the other hand, S&P likes it as well, simply because the more accommodation we globally have, the more easy money we have, the better the stock indices have been performing. We know that was one of the main reasons why we were seeing stocks performing that well. But still, it's early on the day, and yesterday's outside candle was quite a potentially nice reversal candle. I still maintain half of my original position long the S&P, but at the same time, I've hedged it with a quarter short the DAX and a quarter short the FTSE. So more or less, I'm flat stocks at the moment, unless the European or the American stocks perform better, one or the other. Stelio, anything more from Dargi? Is he still in the part that he's speaking?
I think so. I'm actually not watching it live right this second, but I'm going to go. But he did say that there's significant monetary economic stimulus still needed, which was a little bit dovish. No, nothing really major at the moment. It's kind of as with every meeting, he's kind of throwing balls on both sides. You know, both dovish, both hawkish.
From what I see here, though, they are revising lower the GDP forecasts, and quite significantly. I see 2018.
That just came out literally 10 seconds ago.
Yeah, 2018, 2.1 versus 2.4. 2019 at 1.9 versus 1.9, and 1.7. Yeah, those are unchanged, but still, even these unchanged forecasts for 2019 and 2020, they still point to a slowing economic recovery, right?
Yes, agreed, yes.
Yeah, which is something to take notice of.
Yeah.
Okay.
Absolutely.
Okay, let's have a look at the euro yen, because obviously, and the rest of the euro crosses, because the euro crosses are very interesting today. First of all, we're seeing euro yen so far being rejected from the 50 DMA. As I was saying, as long as we remain above 131.50, 131.70, this area roughly, I would still be looking for a move to the downside. I think the next hurdle to the downside to clear is the 128.50 area. So, still not very conclusive, but I'm monitoring this as a potential short-term high before turning lower. But definitely, the big movers here have been the Euro Aussie and the Euro Kiwi. Just look at this massive reversal candle in the Euro Aussie, right? We were talking about this area, this 155.80 area. The Euro Aussie was actually breaking decisively above it so far today. That's why I like to monitor daily closes, because somebody could have easily been trapped by the price action today. But as it seems on the daily closing basis, not only we're going to close below this 155.90 area, but we're actually going to leave behind a very bearish candle with a very, very long higher wick. So this is what I was talking about yesterday. This is what I had drawn, a potential rejection from there and a move lower towards the 152 area. And definitely today's price action gives more credibility to this kind of an interpretation. And what I like even more from a technical perspective, is how the Euro Kiwi has played out, because the Euro Kiwi produced one move lower. Here it is. Then it produced a move higher, which you can see its characteristics were clearly non-impulsive, right? It broke below this ascending channel. It came up, it retested it, and today it's producing a very long outside black candle. So this is a very, very, very bearish candle. And I do think that if this time we clear the 166 area to the downside, there is a decent amount of downside following up. Okay, so I do need to stress out that the euro crosses do look like they are reversing to the downside once again. And look at the EuroCAD as well.
Steve, sorry, before we go to the EuroCAD, just one thing. The ECB is revising inflation outlooks for 2018, 19, and 20. They're all gone to 1.7%. That's up from 1.4% for 2018 and 2019. And it's unchanged at 1.7% for 2020. And Draghi did say, sorry?
Yeah, and Draghi, sorry to interrupt.
Draghi did say explicitly that it's revised mainly due to oil prices. So,
okay. So he's saying that the revisions are due to, in essence, revising the expectations for oil prices. So in essence, they believe that the revision higher, because that was a little bit contradicting with the revision of GDP, but on the other hand, it makes sense because in essence, they mentioned that the inflation increase is transitory due to the change in oil prices. Okay, got it.
Yeah.
Now, talking about EuroCAD, as you see, EuroCAD is also beautiful. Came back, found support first of all at the 150 area. It's an area we had marked like a long time ago. Found support there, rebounded, came back, retested this broken trend line, this time from the downside, and it also seems to be rolling over today, posting an outside black candle as well as the Euro Kiwi has done. And that I think should be a powerful signal that there is more downside coming. So I do think that the Euro cross is probably so far, and if they do confirm at the daily at the day's close, I think they produce some nice opportunities. Even if you see the RSI profiles, for example, look at this. The EuroCAD RSI, right? EuroCAD RSI came down almost to 20, so that was like a confirmed low here. We saw some little divergence. We rebounded. We found resistance exactly where you expect to find resistance in an instrument that is actually moving to the downside. So we found resistance below 60, and it has a potential of rolling over once again. So I do like it. Same deal here. If you look at it, Euro Kiwi, same deal here with the RSI and Euro Aussie, exactly the same thing. A confirmed low in the Euro Aussie. We actually, RSI of the Euro Aussie came down almost to 15, came up to roughly 50, getting rejected today. I think it looks very good for producing more downside. Now let me see. Let me open the question box and see if we have anything to work on.
Cred will be with us in 14 minutes.
Yeah,
he's in the house right now. So
at the top of the hour.
Question. Huh?
Yeah, at the top of the hour, right?
Yeah,
Dale?
Right.
Yeah.
He has a pretty big following. Really looking forward to talking to Crypto Cred, especially with what happened Sunday, what we're doing now. So, okay, it's all yours, buddy, for another 14 minutes of chock full of wisdom.
Okay, so let's go back to the metals a little bit, because we have another metal threatening for a breakout here, and this is platinum, right?
Nice.
So platinum is actually now threatening, it's testing the 50 DMA, also highs here. I do think that platinum presents a very nice long opportunity as well. From a technical perspective, I think probably even a better opportunity than gold, right? So silver, platinum, both of them are
industrial attributes.
Yeah, both of them are looking quite nicely for.
And you know what, Steve? And I'll let you go after this. My original song, "Use Less Leverage," just won platinum last week. Just want to let you guys know it's hanging on my wall.
That was a good one. I have to give it to you. That was a good one. Okay, let's see some other euro pairs actually. Euro NOK, to satisfy our friend Stelios here. Euro NOK still moving to the downside. I have to say though that I'm not still convinced that Euro NOK is actually moving lower in the longer term. You can see why, right? If I zoom out, you can see this here. This still looks to me like potentially a bullish formation. Last time we had a look at it, we were up there. I said that it can push lower towards this pennant support before resuming higher. So it's now getting there. It's getting close to strong support. And let's have another kind of exotic euro cross, and this is the euro MXN. So the question now here is, was actually this a false breakout in the euro MXN? So far today is quite a nice reversal day, so I'm going to be paying quite close attention to that, because if we do fall back in this broken triangle, I think that might produce some very, very nice trading opportunities, right? So, two possibilities here. One, finding support at the broken trend line, in which case it will look good for more upside. But if it does break lower from here, it's going to start looking quite a lot like a false move. Now, two more things that I want to show about euro pairs before I go to some yen pairs, because I have a friend asking. Euro pound, what a surprise, is moving lower once again. So in essence, it's reversing, like from a reversal within a reversal within a consolidation. As I've said, this is a very tedious pair to pay attention to. We're more or less back in the middle of this descending channel, so not much to do here. But USD Swiss is starting to look more and more like a pair that, you know, made its corrective move. And, you know, if I do see actually a break above this descending channel, I think I will be safely looking for, you know, a new high from there. So I'm paying close attention to this. I do think that if we close above this descending trend line, the next move might take us close to 102, right? So above parity. So
Steve,
I'm keeping, yes, Elio?
Sorry, just another little leg lower for the euro, because Draghi said a couple of minutes ago that the governing council did not discuss raising rates at all. So that's you know,
Yeah,
it's
you're right.
It's dovish. So
testing 117. Yeah. So in essence, he's not saying something new, but he's confirming
yes.
what the announcement says. So in essence, he's not even trying to moderate somehow the dovish message. He's more or less enhancing it. Okay.
Yes.
So I guess that more or less there is nothing much we can expect from Draghi, as Blake said initially. He said that he can't see how Draghi is actually going to, reverse the initial message we got from the ECB, and indeed he doesn't seem willing to do so. So this increases the possibility that the daily closes that we're going to see today are going to be pointing to what we were initially saying after seeing this move, that perhaps today is going to be a day that will be producing quite big reversals, and the day probably that is going to signal the beginning of another leg higher for the dollar. Anyhow, I think it's still prudent to wait for a few more hours. But yeah, definitely some big signals coming up today. As you see, we already have in the DXY bullish engulfing, and it's about to also become an outside white candle. So we've already engulfed the body of the previous candle and a little bit higher, and it's also going to be an outside white candle. And, you know, in the sense, a key reversal as well, because it had an incremental new low. Very, very, very strong reversal candle for the dollar. If that's the case, I think that we shouldn't even be looking for 92.70 anymore.
97. There should be some problems at 61.8 back. I think it's about 94.30. But if we blow through that, you know, a
if
lot
we
of people
blow
were
through
talking
that,
90. Yeah.
Then we're going 96.50, mate.
Yeah.
That's
Okay.
what I think.
All right.
That's what I think.
That's what I think too.
Yeah. Okay, so let's see what other questions we have. Ed says,
I don't think
good
the
job.
stock market will like it up there. We may eke out new highs in NASDAQ and S&Ps, but I don't think the stock market's going to like it. It's deflationary. So I don't think they're going to like it.
Let's see, because the stock market has not been very rational in many, many occasions. I mean,
true.
Theoretically speaking, yes, I agree with you. And by the way, speaking of yields before, you remember that we were saying yesterday, is this the beginning of one more leg lower in the yields? Likely.
Yeah.
Let's see the bonds as well. Here it is. Here is the ZN.
Pounding the table on this. Yeah.
Yeah. So it's likely underway now.
And they're not selling off with the market with equities recovering either.
Yeah,
and the
so
bounce in the yen is feeble too. So if the where do you think the yen would go if we got up to 122.18 in the notes?
You know, it's multifaceted, but I have to tell you that I do think that 108 has a very big chance of being retested, a very big chance.
Okay.
And if we do break below 108, I think that, you know, 106 is going to print afterwards.
Yeah. Thank you.
My pleasure, mate. So euro is actually at lows of the day as we speak. below 117. Quite
Yeah,
a big
Draghi said a couple of minutes ago that the soft patch in the Eurozone might persist a little bit longer than forecasts. So
yeah,
another
like,
dovish message.
yeah. Okay. So, okay, this is, I have to admit, this is a big surprise for me. I honestly didn't expect such a dovish message from the ECB Stelio. I don't know if anybody did, but I definitely didn't. I have to say that.
I didn't, and the only reason why I can think of is that they announced the gradual stop of QE, so they may have wanted to somehow balance that. I mean, I don't know. I really don't know.
Yeah, but
I didn't expect it.
that's probably an overkill, mate.
Yeah, that's true.
Okay, let's have a look at the pound Swiss because we have a friend asking for it. Pound Swiss. Okay, there's one thing I have to say about the pound Swiss. Quite a strong move lower after overthrowing this channel, and most importantly, this looks like a triangle to me, or something like that, which means that, in all honesty, I think that the pound Swiss, has a very high chance of producing one more leg to the downside, in which case I would be looking for the 128.50 area. Okay, it looks very heavy. This looks like a bearish consolidation. Even if it moves higher, it's going to be just a different kind of form of bearish consolidation. You can see in comparison what kind of a strength the move lower had, and how weak this consolidation is. So I would expect that at least one more move to the downside is going to unfold in the pound Swiss. Okay. Also, RSI shows a confirmed low there. USD-SEK. Yeah, USD-SEK is actually quite interesting. Thank you for reminding me to mention it, because USD-SEK is also showing a very nice reversal. Actually, a couple of days ago, this is what we drew, that if it rebounds from here, it can go back and retest the 875 area. So I have to say, first of all, outside white candle today, so a big reversal so far. 875, probably quite important resistance. If we do break above it, then I think it has a good likelihood that it has resumed the uptrend, right? So watch 875, but definitely so far a very big reversal today. Probably a dangerous thesis to be short after today's candle. Stelio, is there something wrong with my voice?
No, I saw the comment as well, and I can hear you and Dale perfectly fine. So I don't know what the problem is.
Okay. So probably something on our friend's end here. Okay. Why did euro drop? Okay, that's an old question. JPY pairs. Okay, let's have a look at a few more yen pairs. Aussie yen still looking good for more downside, holding within this channel. If we do break below it, I think that's going to be pointing to a continuation lower. Kiwi yen struggling with this 77.50 resistance. As I said, though, if you're looking to be short one of these yen crosses between Aussie and the Kiwi, you want to be selecting the Aussie yen, in my opinion. Now, CAD yen, I was pointing out yesterday that CAD yen is probably one of my preferred yen shorts. Still remains. I do think that there is a chance that this move lower is needing at least one more leg down. So we saw this corrective move higher within this channel. We broke below it. We're consolidating. I think an acceleration lower very likely from here. I already showed the euro yen before. Let's have a look at the pound yen as well. And here's the pound yen. Pound yen finding perfect resistance in this broken trend line. So as long as it remains below there, I do maintain a dovish, a bearish outlook. Okay, I'm not a central banker to be dovish. Oh, thank you, Ed. Okay. So,
all right, I'm going to get restricted with you right now.
Okay.
All right, I'm going to tighten. I'm going to tighten. I'm tightening right here. Your airtime.
Do that. I know that you have a very interesting interview today, Dale.
Yeah, I'm going to do match sales on Steve Volge right here. Remember match sales?
Yes.
Okay. All right. Great
Okay.
job, Steve. Nice
Okay,
trading. I'm glad you got out of your
I,
euro long at the
that,
high.
I
You
have
got
to
to
say,
do a
yes,
cartwheel on that. Do a
yeah, I have
cartwheel.
to say that was lucky. That
All
was
right.
lucky. That was pure luck.
All right, guys. So crypto cred. Really looking forward to talking to you. It's an excellent timing to have an interview with someone who specializes in that new asset class. So welcome to Face, Cred.
Hello, Dale. How are you doing?
Great. So nice to meet you. I want to thank you for taking time out of your day. I know crypto action's been hot and heavy. And before we get to the charts, the present, and maybe into the future, a glance into the future, I'd like us to throttle back and tell us what your entree was into the business at, the beginning of your journey as a trader.
Sure, Dale. Well, first of all, thanks very much for having me. I've actually been following the guys in the live streams for quite a few months now, which will make sense in a second. So my sort of foray into trading, technical analysis, markets was actually through crypto to start off with, and that was in around the summer of last year, when we had some sort of contentious debates within the community about the direction in which the technology should go. The crypto listeners will know this as the sort of hard fork debate. And
Right.
when it was all over the news about how the network should behave and so on. And that's when I really took an interest in Bitcoin. I sort of did some freelance work on the internet that I was paid for in Bitcoin in the past, but nothing really I paid attention to, certainly not on a market technical level. And then my friend just linked me a webinar, a bit like this one. And he said, hey, these guys are going to talk about, all these coins. You should go check it out. And being excited as I was, I entered that live stream, and they were doing something like this, Dale. They had all these charts, all these fibs, trend lines, horizontals, every indicator under the sun. And I just thought, and they were discussing it in such a sort of fluent and fluid way. I thought, wow, that's fascinating. I really want to sort of be able to speak that language. And that's where it started, and the rest is history, so to speak.
I see that you went the other way. You're trading naked here. So you have none of those indicators that you spoke about. Everyone looking for the holy grail that doesn't exist, huh, Cred?
That's right, Dale. I agree with you completely. And it's something, it's almost an inverse relationship. The more proficient and experienced I got with markets, the fewer indicators I used over time. The most you'll catch me doing is a bit of RSI or perhaps OBV from time to time, but mostly the candlesticks tell their own story.
Okay, so you trade naked, so I hope you do it with your shades drawn.
Yes, absolutely. Yeah, the
Oh,
police has been
okay.
around.
So, okay, Cred, so we had that hack on Sunday night and, washed out about a month or two of the market trying to stabilize, and there's probably a lot of despondency here now that we're about to test the Feb lows. I don't think we got there yet. What's your take on this? And I was watching, I watched CNBC sometimes even with the volume on, and and they bring crypto guys in that every week. Yeah, it's a great buying opportunity long term. It's a great buying opportunity long term. In the meantime, short term, if you're leveraged at all, you're taking serious losses. So, is there ever a good time to sell crypto?
There is a good time to sell crypto, as we can see from the chart, right? I'm sure the sellers from this run up were a lot happier than the sellers from these lows, right? And I'd agree with your general skepticism of CNBC. If someone is able to give very accurate and consistent calls on where an asset is going, it's unlikely they'll go on TV and just chat about it to the masses, right? So totally with you on that.
So what's your outlook here? Are we near the capitulation stage in Bitcoin? Are you, like I think maybe a lot of professionals now, that maybe the small guys and the retailers are getting wiped out because they use too much leverage and they're forced out on margin calls? Are you looking for some type of climax that could end up being a good entry on the long side here?
Sure. And I agree with your comments about leverage, especially. So a lot of crypto traders like altcoins a lot, the alternate cryptocurrencies which trade on these exchanges. And since altcoins have been, for a while, at least on the way down, were quite flat and didn't have the type of returns that we saw in the summer of 2017, people instead went towards Bitcoin leverage trading, seeking the same returns or yields and very much to their own demise, as you pointed out.
Are the altcoins as collateral damage to what's happening in the, let's call them majors like Bitcoin,
Sure.
Ethereum, and Litecoin?
I would say so, yeah. From the data I've seen, they're very closely correlated. So it's a type of thing where a lot of, especially recently, if you, for example, are bullish on Bitcoin, there's a reasonably good chance that you can also open longs on your altcoin positions and then vice versa as well. So the correlation has been there, providing ample trading opportunities if you get the big picture right, Dale.
Okay. Are you a believer in altcoins at the right time? And do you follow ICOs? And how do you know if it's not a scam?
Sure. I think it's reasonable to have a presumption that most ICOs you buy are either a scam or won't be around in a number of years, right? It's no surprise that most of these projects wouldn't raise a penny going through traditional sort of venture capital or whatever means of funding they'd go through. And it's just more the crypto mania that makes raising money very easy. But that doesn't mean you can't make money trading altcoins. Right. The difference being that I primarily use altcoins as a means to an end, and that end is to accumulate more Bitcoin. So they are certainly tradable. The good ones, or the popular ones, do have enough volume to make them tradable as well. But my personal interest is, of course, on the big daddy, the Bitcoin.
Okay, so I've noticed though on the big daddy compared to Ethereum has a little more constructive pattern. And also, I believe more dollar volume is flowing into Ethereum over the course of the last several months, and it's starting to gain a little bit of market share on Bitcoin. Is there a more positive story? Is the chart, I believe, so the price action has a message of fundamentals in it. Ethereum acting better than Bitcoin. Why don't we start with what you're looking for in Bitcoin, and then if you would like to, we can move to Ethereum.
Yeah, happily, Dale. So interestingly enough, for Bitcoin analysis, I'm going to actually take us back to March/April, if you don't mind. Right?
Okay.
So the way I sort of look at it is, once we had this, whatever you want to call this type of structure, double top, let's use that because it's popular and well known. Once we started getting rejected from it and started breaking down, I always ask myself the question, where was the range low formed, or where did price find support? I would posit that the answer to that question was at this low here, right? Some viewers might be thinking, well, wasn't there some support found sort of in this area? But as you can see, we only had one up day here, and then it still formed a swing high and sold off, right? So for me, the real area of support that we found was at this range low, denoted by the red line. Okay.
Interesting.
As you can see, price rallied away from it, and then we had this clean break of this range low, and then it acted as resistance and price was below it, right? And let's ignore this for now.
So it's like your pivot point, and then when it got back above it, you had a nice little pop.
That's right. That's right.
Like a false breakdown. Yeah,
exactly.
Or you could call it a false breakdown. Okay.
Yes, exactly. And if you look at the sort of fractal or price pattern that took place, you see that at this time, without being privy to the subsequent price action, you're quite bearish if price then comes below this low, right? Because that's your range low that provided you support, and below that you're likely to be bearish. And the case for that is bolstered if we extend it a bit this way. You see you've got equal daily lows here, right? Where we know pockets of liquidity typically reside. So if we then go back,
like an FX trader.
Well, yeah, interestingly enough, Dale, a lot of my favorite tools and teachings and learnings have come from Forex traders, despite being raised in crypto, so to speak. And I found it exceptionally helpful. One of your guests, actually, I'm sure you remember Saeed Zaman, who came on. Yeah, so we hang out and chat a lot. And I picked up some great stuff.
The guy who taught Saeed is going to be with us tomorrow, Michael Huddleston.
Well, there it is. I've also looked at some of his content as well. So it's a very small world here, Dale.
It is.
But regardless, looking at the price action here, we know that it's very likely that below these lows, unless they have a very sort of loose stop below the sort of proper low of 6K, we're going to have a lot of sellers below 7K. And so if we look at what price did, so it took out this low, and then naturally people would, and not unreasonably, be bearish, right? But if we sort of look at what the price did, you can see that accumulated below this range low, right? So I'm going to just box it out to make it very clear. So price breaks below the range low, your retail traders or your average traders are going to get bearish, especially when it starts acting as resistance as it did here. But now we know that when you get a breakout, this really bullish candle here, right, took out previous day's low and closed well above it and absolutely wiped the trading range. At that stage, we know that this whole price action that we've boxed out was just a stop run or a deviation from this range low, right? So bearing that price pattern in mind, I'm going to take us to the current price action. So again, once we broke down, I mean, you can use any reference point, either these highs or, you know, a recent swing high. Where did price find like a proper pocket of support? Using the same sort of arguments, I would say that it was here, right? So we had a breakdown, price comes into it, forms a swing low, right? Or forms a low, and then we have a few up days, though nothing too impulsive or crazy.
Oh yeah, people were trying to call that a head and shoulders bottom, and
right.
And I said, you know, any market that gives you 3 days to buy a breakout, be skeptical.
That's right. I would agree with you completely. You don't really get that much time to catch the winners.
No, Mr. Market, if they're accommodating you, they just want more stops to build up. But okay, so here we are now.
So here we are now, and so bearing in mind what we just showed in the price action here, we can perhaps speculate on some similarities. So we're currently below this range low here, right? So we're below the red line as we were here, but more crucially, we've also taken out at this point all of the April's lows, right? So if I mark this out in a different color, you can see that the price action here, the lowest low we made, which was yesterday, took out the lowest low of the April consolidation. So we know with these clean stops of this consolidation that there's going to be, again, a lot of liquidity residing and a lot of sellers waiting below this low. So now,
you think they go for the grand prize, and that was the low back end? Yeah, that one.
This one, yeah. So this is the really interesting thing to me. So if it's indeed true that this move down was simply a stop run of the April lows, then that's confirmed if price then finds support above the previous range low, just like it did here, right?
So back over 70.40 tells you that you know, we have a rally that's going.
That's what I would say. That's what I would argue, Dale. So for me, the way I would argue is,
points. You know, you're very big on pivot points.
I am. Yeah, I think if you find out where your range is and where the market's going to turn, and with a higher time frame context of where is the liquidity residing or where does the market want to go, that can contextualize sort of a lot of the price action that you see. So if this type of structure happens, Dale, that we push up and find support above the previous range low, then just like this was a deviation to take out the sellers here, this would also be a deviation to take out the sellers below the April low. Now, the troubling thing at the moment, Dale, is we're not seeing that type of rejection, right? Typically, I like to see some sort of spike or some sort of argument or evidence that the sellers are the buyers at that stage are stepping in, and I'm simply not quite seeing it yet. So where are the next stops resting? Well, as you pointed out, the grand prize, if you will, the 6K low that we made in February, and we actually came, as you can see, very close to it anyway. So a lot of traders like to talk about confirmation. A lot of the time, if you push those traders to tell them what does confirmation actually mean, they won't have an answer for you. Whereas the way I look at things, it's quite clear that confirmation can take two forms. The one I'd be quite sure about is if we get back above 70.47 using the Bitfinex ticker here. That would suggest to me that this whole move down, so this whole price action here, was just a trap any stops or sellers below these lows, right? And that would be
what exchange, you know, there's a big debate, and I'm I'm a little leery of unregulated exchanges. Where do you feel comfortable parking a lot of money and keeping it there? Anywhere?
Right. In terms of exchanges, the answer is none, unfortunately, Dale. I think one of the benefits of the whole cryptocurrency thing is being the custodian of your own assets in the most secure way possible. So you get specific hardware wallets, which do a very good job. But no, I agree with you there. I'm not, especially because there's been precedent of exchanges being hacked. So I'm not a big fan of parking a lot of Bitcoin in exchanges, unless I'm of course trading it.
Great advice. If you're going to trade it, have a wallet.
That's right. And then, sorry, one more thing I'll mention about Bitcoin is I look at price horizontally most of the time, right? In terms of swing highs, swing lows, sort of stops, and just horizontal support resistance levels. But if there's a good trend line, I don't discriminate, right? So if we sort of map out something like this, right, without being too artistic about it, we can see that we have a really important trend line here on Bitcoin. Yeah. And this trend line exists regardless of whether you draw it with sort of logarithmically, or whether you draw it in a linear fashion. So as you can see, in November, this trend line sort of, that was the first touch, gave us support, second touch at the 6K low, third touch at the 6.5K low. And as you can see now, Dale, we've broken down below it. And when I say broken down, this isn't some wick or some poke or, some almost sort of test. We have a very impulsive, clean weekly break below this trend line. Right? And I'm a big fan of this trend line because it's been around for a while, 3 touches, and it's evenly spaced as well, right? As I said, I don't discriminate. So technically, anything until price can get above this trend line and do something like this, I don't know why it's giving me pyramid drawings, but I'm sure you understand what I'm getting at. Yeah. Until price can get back above this trend line, technically any engagement with it is shortable as a retest, right?
Okay. So if it was possible, the measured move off this formation and breakdown, I'd call it 20,000 to say 13,000. A $13,000 move from the breakdown would make Bitcoin negative 4,000.
Yes, it would. Yes, it would.
What do you think? People have to pay you to hold their wallet.
That's right. Yeah, you have to pay. But I don't know who you'd pay. But
serious. In a way, I'm serious. I mean, it measures it classically all the way down there. That's that's a $14,000, $13,000 formation.
Yes. It's a significant break for sure, and that also means that any retest is technically shortable unless price can then find support above it. Right? It's your basic maxim of it provided us really good long-term high time frame support, and now that it's been broken by a very sort of uncontentious candle, this is a break, and no matter how you draw it, then any retest is technically resistant.
Does it come in around 74.40 like your daily did to maybe have confluence between that line?
It depends where we actually at which point we come back to it, but if it was quite quick, it's put about $200 above my so-called confirmation. Okay.
All right.
Not a crazy amount. Yeah, exactly.
Close enough for government work.
But yeah, absolutely. And then downside targets, if the 6K low gets taken, I would hope to see one of two things. But even on the weekly time frame here, Dale, if we map out our April low and make a slightly thinner line to make it more visible, you can see that we're already starting to get some semblance of rejection on this weekly candle. Admittedly, it's only Thursday, so still some time for it to close. But on a much higher time frame basis, it would be quite bullish if price trades below the April lows, but then closes above them on this time frame. Meaning all the sellers below here are trapped, and price is finding support above it.
Like your style. So I noticed, I found you on Twitter, and I went to your link. And there's not a website, and I notice a lot of people are using it. Why don't you tell us a little bit about what you do? And you use what's called Telegram. And,
yeah, that's right.
And what do you have? You have a trading room, chat. What do you have in there?
Sure, Dale. So yeah, there's no website. The couple things I do have is I have a Telegram, like a room. Now, it's not one where people can converse. It's kind of a one-man show where I essentially sort of post things and people can observe. So without
it's not interactive.
It's not, unfortunately.
Okay.
No.
All right.
And the benefit of that is, as I'm sure you've seen, Dale, the character limit on Twitter is unforgivingly low. So if I ever have any thoughts that I want to sort of really expand on and talk about something in price or something else, it's quite nice to have that platform without a character limit where I can go into more detail like I am here to make my thoughts clear.
Okay. Is it a membership service?
No,
is it free?
It's free. Yeah, it's free. The link is in my Twitter bio description. There's quite a few people in there, and sometimes I do stuff like, so-called exclusive live streams or webinars, but it's free access. It's not really that exclusive. You just have to be in the group.
Okay. Well, that's great how you're trying to help people out there. And I don't know about you, but if you have a community where it's interactive, you could learn a lot from others.
Absolutely. Yeah.
Have you experienced that?
I have, yeah. Cryptocurrency Twitter is quite good at setting up its own little niches and communities. We use stuff like Discord as well, which is another type of chat voice program type thing. And I'm in a few of those where I have the opportunity to, exchange ideas and share insights with other really great guys and girls.
All right, I just want to clarify something. Earlier you said you were raised from a crypt or raised in crypto.
Yeah.
Because if you were raised from a crypt, you have to change your handle to Lazarus.
That's right. No, I haven't got any super challenging or entertaining childhood stories. I have to defer and say, unfortunately, it is the more boring, raised in sort of cryptocurrency trading. That's my real first exposure to markets. But
yeah,
it's a mix, Dale, because I was taught a lot by Forex traders, right? So a lot of the structures and stuff I learned was from traditional markets while trading this.
Yeah, well, your reputation precedes you here, Cred, because Ed Schaefer saying Crypto Cred is a good presenter, gets into very good analysis, usable in any market. So please do bring him back often, as I like his analysis and methodology.
Thank you very much, Jan.
So you're out there helping people. And
trying my best, Dale.
That makes you my trading warrior brother, because it sounds like we have a mission of building up and edifying traders. And
absolutely, very happy to be in that privileged group.
Yeah. So why don't we wrap it with why don't I get a Nostra cred from you, and it could be any instrument in the cryptocurrency universe. What are you looking at that might present a nice opportunity outside of the majors? Anything?
So, I mean, altcoins have been, they usually follow Ethereum to some extent, or they're everything's quite correlated at the moment.
Right.
But if we take a look at Ethereum dollar, I think it's in quite an interesting position right now. If we take a look at the daily time frame,
See, it's not even close to its April low. That's what I was talking about.
Right. Yeah, and but it looks quite similar, doesn't it? That April low. They had the same kind of accumulation, clean lows. But yeah, as Bitcoin has already spiked those April lows, whereas Ethereum has not yet. But the specific price structure that I was looking at on Ethereum is, if we sort of map out these lows here, you can. I can even box it out to make it simple. So we can do something like this, right? And you can see that. Price moved up from this consolidation, came back, retested, found support, retested, found support, but less so. But now we've had a clean break of that support structure, which isn't really great news, right? And especially if Bitcoin keeps tumbling, the chances of Ethereum sort of rallying up aren't so great, given the correlations at the moment. So, technically, the way I trade setups, this is shortable now that broken support has turn to resistance, with the invalidation level probably being if you're sort of more aggressive above this high. But then in terms of downside targets, if this continues in its fashion, strong support, flipped, and currently retesting, if you do get the expansion move down, which confirms that this is a sort of SR flip, I'd be looking at two areas. So one is obviously, retesting old highs. So this area here, denoted by the red line. This is just very, very straightforward stuff. But then if that fails to hold, and this is what we talked about earlier, just like on Bitcoin, we know that there's a lot of liquidity below these very clean April lows, right? So at the moment, I'm seeing a very significant break in structure on the Ethereum dollar chart on the daily time frame. And if this is a case of your classic support, 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 breakdown, retest, and you expect continuation, then I think we might be in for either close to 400 or sub $400 Ethereum. I really do think this is a pivotal level, as price has proved to us already. So that's something I'm eyeing on aside from just Bitcoin.
What a great presentation. I'm really glad I reached out to you, Cred, and want to thank you for coming here and sharing. I love your method because it's simple. And and really keep it simple, stupid, KISS, right? Or I call it, if you ever saw the movie Forrest Gump,
I have,
Keep
of
it
course.
simple. Yeah, simple and powerful. So I really am glad to meet you, glad our paths cross, and
Likewise, though.
you've really come a long way for someone having only done this a couple years, a year or two, and
Yeah, thank you very much.
I hope that your words continue to edify the people that follow you, and you could follow Cred at Crypto Cred, and may pips rain down on you and everyone whose words you touch.
Thank you very much, Dale. Thanks for having me. It's been a blast.
All right. There you go, everyone. Follow Crypto Cred at Crypto Cred. Check them out on Telegram. And that's a wrap for us here on Thursday. See everyone for TGIF. I don't know about you guys, but I'm sure ready for Friday after the Fed and the summit and the ECB. Looking forward to no big red events Friday, book squaring mainly. And most of all, guys, remember, don't just count your pips, count your blessings. See everyone tomorrow. Good hunting the rest of the day. You're very welcome, Alan. Adios. Thank you, team. Great job. See everyone tomorrow. Thanks again, Cred.
Thank you, Dale.